Okay, want to do a update here on the market. Again, as I've stated in previous videos, this is just my take on the market on individual stocks and ETFs, different sectors, and not any recommendations as far as investments, but just strictly some of the techniques that I use, some of the tools that I use from a technical analysis perspective, and really doing this more for family members and a few friends so that they can learn from what I've been doing for the last 2 decades basically as far as technical analysis is concerned. So anyway, let's go into it here. This is the S&P 500. So we've been looking at this chart last few months for this channel here. So this upper white line is the channel that we've been hugging against here for the last couple of months. And the question remains whether or not we're able to get above this upper channel. We are making higher highs. If I zoom in here, 6 month, let me do the 2 year here. It's hard to see because I got a lot of stuff on here with these support and resistance levels, but you can see we came up to this white line again here, this week, and couldn't maintain that level of above 7,000. I think we hit 7,004 was the high. Let me zoom in on that. That was 7,002.28. Looks like on the 28th last week. I think that was Wednesday. So anyway, that's the all-time high, and we sold off from there, and you can see we're bouncing against that. The orange lines that I've drew, these are significant. This upper orange line here and this bottom one. So these are the last couple of highs, and these are the last couple of lows. These blue lines are some unfilled gaps, which, as you know, when I talk about gaps, you got to keep an eye on those because they usually do get filled. And we've gotten a couple of unfilled ones here below since this, November 21st low that we made. So that's concerning. But what's even more concerning is this chart pattern here, this smaller pattern that we have within the broader channel, which is called a rising wedge. So when you're making higher highs like this, and your higher lows are getting closer to your higher highs, that's like a squeeze position, and these usually break down. That's actually a very bearish chart pattern. So these usually break down and they'll waterfall. What you often see is these actually peaking above and then coming all the way down. It's kind of like a fake breakout, and then it basically follows through with a breakdown. But this is interesting where we are right now. We've got a bearish candle today, so we hit that top of that orange line, which is also coincides with the longer term white line, this one right here. So those are both basically what I'm tagging there as far as the previous highs. But if you look at what we did today here, you can see that we basically came down and we touched that bottom one, just about touched the top, and came down to the bottom. We're just above the 50-day moving average right now, which is at 68.69. So we were below that. We're down 94 right now in the S&P. We were well over 100 down, and you can see where that bounce came in. If I look at the 30-minute candle, came down just about perfectly and hit that lower trend line here. Just like we did on January 20th. So that's where our bounce is. The question now is, do we go all the way back up to the top and retest 7,000, or does this break down from here and we get follow through, and now all of a sudden you're looking at support levels? January 20th being the first one, which is around 67.89. So 7,000 is really key. If you get above 7,000 for this chart pattern, you're probably looking at a run. Now, again, this channel that we're looking at, this goes back, many years here, back to 2020 or so. But if you get above this, now all of a sudden you create another channel, and that's very, very bullish. But if we can't get above that, now all of a sudden, we're going to have a more serious pullback here. And then you got to start looking at former lows as support areas. And then the other things that I've mentioned in the past, when I look at the moving average, convergence, divergence, the MACD indicator, I've had this on several of my videos in the past. You can see here as this MACD, as the price on the S&P is making higher highs up here, this MACD is making lower highs, and they call that negative divergence. So you get a positive divergence and negative divergence. And negative divergence, basically, when that happens, you're looking for a reversal type pattern, in stock price. So you can see I've had this here for a while. Every time we get up and we hit that trend line, it gets rejected. And normally something that's been going on this long, I mean, this goes all the way back to, basically May. This high point here was in May of last year. So when you do see something this elongated, typically you're going to go below the zero line here. That typically happens at some point. So when you go below zero, that's a sell signal, and that's normally, I'm not saying you're going to get something like this here, what we had in April, but you're going to get normally below zero a bigger pullback. So we'll have to see what happens here and how that plays out. But again, looking at the 1 month chart, 30 minutes, you can see where we're at here. So this is a kind of a critical situation here against this upper or this lower trend line here on this rising wedge pattern. Whether or not that supports it and we try to get above, or if this pattern actually follows through and as a bearish chart pattern we break down here and then have a little bit of a cascading, and then from there we'd have to see where the support might be. And again, we got a couple of unfilled gaps here, and like I said, those gaps usually at some point do get filled in the future. So these gap levels, these could be areas of really strong support once they get filled. But the key here is moving averages. So you look at your 50-day. We're right there right now. Then we got this magenta, which is the 150, and then the gray here is the 200, and then the yellow is the 300. When you start going below the 200, that's more like bear market territory. I doubt we'll break the 200, but it's possible we get down that low. If this is a significant pullback here. And if we look at the NASDAQ really quick. As far as the NASDAQ, we are below the 50-day already. You can see the 50 days, the blue line here. So the 50-day is at, what do we got here? 23,364, and we're at 23,079 right now. So we're below that. So next level of support on the NASDAQ is 22,916. That's this former low from January 20th. And then we've got a December 17th low of 22,692. And then you have to go all the way back to November 21st of 21,898, for the next low. So these are three critical areas of support here. If we break all of those, if we were to get down that far, then you'd have to look at support here at the 150-day moving average. That would be key. So that's kind of where we are with the indexes. I'm just going to go through some charts really quick just to show you what I've been looking at. The the big ones that have really just had incredible strength. Micron Technologies. You can just see this chart just outstanding. Hit the 50-day here. This was November 21st here. I was buying this back in November. Was loading up on this SanDisk and Bloom Energy, and I've been taking profits, all the way up, especially on the gap ups, and and end up getting out of all three of those positions. Unfortunately, sold it a little bit too soon, but this thing just keeps on going and going, and at some point you'll get a pullback, and the 21 days good area for support, which is this line right here, and then if we get back down to the 50 at some point, obviously that's going to be a big buying area if we were to come back down that far, but not sure that'll happen anytime soon. But these were great areas right here, entry areas. Same thing with SanDisk. Had this one as well, and this one's actually up today, but we had this big gap up here. We had a cup formation here, and we hit 285 even. Let's see, that was right here on January 5th, and I sold there because I got a little bit too cute. I was thinking we were going to form a handle here. Sometimes you get a little bit too comfortable with some of these chart patterns, and a cup formation is common, but not as common as a cup with a handle. So I was thinking we'd get a little bit of a 5, maybe 6%, 7% pullback here. We did fill the gap that day. It came down to 266, and I got busy that afternoon. I sold it like 284 something. Was going to buy it back once this gap got filled from the previous day, and unfortunately got busy. And the next day here, we just had a huge breakout on high volume, and so I missed all this unfortunately. Should have got back in that same day after I sold it with the gap, once the gap was filled at 266, but didn't do that, and this thing just took off. So I sold around 284 some. It's at 676 today. That happens. Got a little bit too cute with the chart pattern here, and should have just held on, or at least bought it back right away once the gap was filled. But anyway, keeping an eye on this one. I think support at the 21 day will definitely be there if it gets down at some point. Again, not sure when we'll see the 50 day again, but this is just incredible stock, really, really strong. And then Bloom Energy was another one. This one I actually still have some, not much though. I sold most of it. Again, this came down here in November, December. We had strong support, around the 75, 76 level here. And, then just basically took off from there. So double bottom pattern here. And then, again, not much of a handle. I was thinking we would get a handle here. So I was selling up here and thought I'd get a better opportunity at the 21 day to refill and reload, but didn't get that chance. Thing just took off here. And even today it's up, 4.5%. So, with these strong stocks, they'll leave the gate and you may not always be able to catch them. So should have held on to all of my shares of this one, or at least most of them, along with SanDisk and Micron, but made really, really good money on those, in terms of what my profit margins are and what my, expectations are. But, when you miss out on a bigger run like that, it obviously hurts a little bit. But was really happy to be able to get in these when I did. And I'm keeping an eye on them, obviously, for any pullbacks. Those are really, really strong. Some of the other stocks I'm looking at, Lam Research is another good one. If we're getting a pullback today, about 3%. But if we get down to the 21 day, that might be a good opportunity. Applied Materials, I do have this one. We're at the 21 day today, so I think this might be a good area here. Again, really, really good looking chart as far as some of these semiconductors are concerned. Let's see, just go into some of the other ones. The Mag 7, Apple looking good today here. This is a common tactic that I use when I'm looking at a chart like Apple here. So you see this blue line. This is a 30-minute chart, and I was really monitoring this. So I had been buying Apple just because it was really, really strong. We go back to that November 21st low. You could just see the strength here. This was, not only above its 50 day, but 21 day as well. So really, really strong. And then, earnings were good, but for some reason we had this pullback here. So typically I wouldn't be buying below the 50-day moving average, which is the blue line here. But Apple is such a strong stock. I took advantage of this here and thought, hey, if we can stay above these former lows here of 244, I'm a buyer. And we came just below that. 244 even on October 10th was the low, and we came down to 243.42. So I did not get stopped out. It was close, but you can see now we came. I drew this trend line here, the blue line, and this is a tactic I like to use when we're in a downtrend. I have these highs here, and basically I'm monitoring this for a breakout. And once you get above that trend line, the strategy is that you're gonna take off from there. Usually you'll come back and retest it, and I think we did that today. So if you look at the 1 month, 30-minute chart, we broke out above this yesterday, and then we came down here. This is the first 30 minutes of this morning, and we retested that perfectly, that blue trend line, and now we're starting to take off. So even though the market's down, it was well down over 100 points today. The Nasdaq was down over 500. Apple's actually up, so that's very, very good, positive relative strength. So I really like Apple a lot. I picked up some more this morning. In this area right here around 268. So I think this is good, but again, it's dependent upon what happens in the overall market. If the market, again, going back to the S&P, if we fade, the S&P here, this is going to affect everything, right? If we start going significantly below the 50-day here and we waterfall down because of this rising wedge pattern, then every stock's going to get affected by that, even Apple. But this is a bull market, so the assumption is that the trend is going to continue to be up, and so I think this is a good one right here. As long as the trend stays up with the overall market, we're making higher highs and higher lows. Let's see a couple other ones. Microsoft, this has really been getting hammered. So if we looked at the 5-year chart, you can see this has been in a channel. This is 3+ years. Between this channel, we're right at that right now. You can see we're at 409.43. So we're right about where that bottom trend line is on this 3+ year, upward channel. So I would expect to see some support here. If this breaks down, now all of a sudden, you're looking at basically, support all the way down here in the, what is that, like the 340 area, which would be, that would be quite a drop more from where we are right now. But we already filled the earnings gap here from April 30th of last year, which was, well, not yet. No, we're at let's see, that was 396. It closed at 395. So we didn't fill completely that gap yet. So this could go down to 395, before that gap is filled, this big gap from April of last year. And again, like I said, these gaps usually get filled. So that might be just below this trend line here, around the 400, 395 level, where we start seeing some support. But when these trend lines break, everybody's seeing these, and when they break, they usually break pretty hard. Can show you one of the software companies, not that one, let's see, Twilio. Twilio is an example of that. See, we had a channel here, this bottom white one, upper white one to form the channel. Got above it here a little bit, but I think this bottom trend line here is pretty solid. And you can see what happened today. We broke down, and now all of a sudden this thing's down over 8%. So that's why these trend lines are important. If they break, I usually put my stop loss right below them, and if they get back above, I could always get back in. But looking at Microsoft, if we go much lower here, we're right at that critical level right now. If we go much lower here, this thing is probably gonna go down on that 395 level at least. Another, maybe 15 points, $15. So, okay. Let's see what else we got. AMD is another one I like. This one's down today, but this looks like a cup and handle forming here. So a little bit more in the cup than you like to see. Typically, IBD says 5, 6, 7% on the handle. This thing is down more like 12% right now from the low the other day. But I do like this one if the market could get back into positive territory here next couple of days or next week. I think that this would be a good one. The breakout here would be above the former handle high of 266.96. It's at 240 right now. So it's getting support, at the 21-day. So I think if it can stay above these levels here, above 234, that could form a handle and then break out and go from there. So cup with handle forming on that one. And I think we see a lot of these. The cup with handles, there's quite a few of these chart patterns right now. Meta is another one. I had this one, sold it yesterday. This is another channel, longer term channel. You can see here's the upper white trend line. Here's the bottom trend line. We had a huge gap here. I held it through the gap. I usually don't like to hold through gaps, but I did hold this one because I nailed this one perfectly. This went down on January 20th to even $600. You can see the chart right here. $600, is the low. And I got this thing like around 602.50. So I put a limit order in and I got it. And then we just had some big gap ups here and then the earnings. So once this gap broke here pretty solid yesterday, I was hoping we would stay on earnings gaps, a lot of times those gaps will stay open. They won't get filled. They'll actually act as support. So I was hoping that the bottom of the gap here, which was 712.55, would hold, but we held it on Friday, but then yesterday this thing broke through, so my stop loss got hit, and I'm glad it did because today we're down big time, 19, 20 points. So was really glad I sold it. But I'm looking to get into this. The closer we get down to this trend line, in this former support, which is 600, that's great, I think, area to buy, especially if we get like to the 50-day around 652. That to me is a good buying opportunity. I think that Meta, is a good opportunity there. Can maybe get back up above, all these former highs here. And obviously they're big into the AI stuff, so I think that's a good one to keep an eye on. Let's see some of the mining stocks. Well, look at gold first here. GLD, obviously, everybody's seen all the gold stuff in the news, and you can just see how this thing went above 500, the GLD ETF, and then just came down almost to the 50-day. So it's gotten a jump today. It's up 6%, but the question is, it's probably going to take a long time before before it gets back up to these highs here. There's going to be a lot of basing, I think, that has to occur here. So could be strong support to 50-day. If that breaks, then we'll have to see if these former lows, start acting as support. Same thing with silver. SLV is a silver ETF. This came down even closer to the 50-day. Got a bounce today, but that's fading a little bit. There's a couple of different silver instruments that I look at. So SLV, PSLV, which is the Sprott Physical Silver Trust, is another vehicle there that you can use as far as silver, and PAS is another one. Pan American Silver. So these are all about the same in terms of where they are with respect to their 50-day moving averages. But as you get closer to the 50-day, that might be an opportunity there, for a bounce, like it did the first time here yesterday. I like the mining stocks. So Barrick Mining came down to the 50-day, so I do have this one. I bought this one close to the 50-day yesterday. And I think these mining stocks, and the precious metal stuff, they're behaving a lot differently than, what's being tracked in the S&P 500 and the NASDAQ. Obviously, this is a totally different sector, and it's very, very high up on the IBD list. So I think all of these, in terms of the miners, might be a little bit safer than the actual, gold and silver ETFs themselves. So same thing here. This is a gold miner here, AU. This one came down to the 50-day here last couple of days, and it's up today 4 or 5%. GDX is another one. This is a long time stock that I've been in and out of over the years, but this came down closer to 50-day, so might be an opportunity there. Another one is HL. I like this one a lot. This one's up about 6% today. I do have this one as well. And again, you could put your stop loss just right below the 50-day. Got a huge pullback here, so can buy shares here, and then your low from yesterday is 20.95 on this one. You can either put your stop loss just below that or just below the 50-day, which is at 20.93. Okay, let's see what else. Oh, Freeport, I like that one as well. Freeport-McMoRan. This is they've got, I think, about a dozen copper mines. This one's up today nicely, 5%, but this is another solid run here, and see support here the other day on the 21-day moving average. So I do like this one from a copper perspective. So those are some of the gold mine, or the mining stocks, and some of the material ones. They're up big today. UU Energy Fuels, this one's up 14%. You can see these all look very similar. There's a nice cup formation, and now they're forming their handle, and they're coming down like to 21-day. So I do have this one. I have NB is another one I have. This one's up 17%, but you can see here we're kind of forming a cup. And so, if you can get back up to around, 1258, that's the former high here. That would be kind of the cup target. And then either we take off from there, like, SanDisk and, Micron Technologies did, or, we form a handle. Like, what we're seeing in some of these other ones, like USAR is another one. These are all, again, materials. This one's up 16%. But you can see here we've kind of got a cup, and now it looks like we're forming the right side of a handle. Let's see, CRML is another one that's up 15%. Again, looks like we're in the handle stage right there. TMQ is up 11%. Came down to the 50-day. This looks like it's still forming the cup. And then REMX. So there's a bunch of these. This one's up only 5% today, but there's a bunch of these that look really solid. And everything above the 50-day, when you're above the 50-day, that's strong, especially where we are right now with the indexes. It shows strong relative strength. And MP is another one that's up 6%. I think these are all, again, very volatile, given what's been happening with gold and silver and some of the other, basic material stuff, but and precious metals and, all of the things that are going on politically and geopolitically. But, if these can stay above these former lows, I think they can go back to the highs. All right, so let's see some of the other big names. Palantir had really good earnings last night. I mean, just knocked it out of the park. They're up about 5-6% today. So this one was really, starting to get hammered pretty good here. As far as we came down to below the November 21st low, which shows poor relative strength. That was on November 21st, 147.56, and we actually undercut that. On Friday, which was 145.14. So got a big boost though today from the earnings, and we're still below the 50-day moving average, but we'll see if this turns into a double bottom pattern here, and then see what that looks like from here. You get rid of some of these lines here, MACD, but you can see we faded the move here, but outstanding earnings. I mean, longer term, this thing should, I would think, get back up above the 50 once the market turns around. NVIDIA, same thing, very good earnings, that came out, and these. I think that was. Let's see, when was that? I thought that was the other day. NVIDIA. I have to check on that quick. When was NVIDIA earnings? Let me look that up quick here. I thought they already came out, but maybe not. Yeah, February 25th. So they didn't come out yet. February 25th, so later this month. But getting a big pullback here, almost 5% pullback today. But we'll see if we get support here at this the 150-day moving average. All right. So then a couple of other ones to look at. Some really strong stocks here. FedEx. You look at this chart. I mean, it's just doing outstanding, up 5% today. But look at that. Just really taken off since October of last year. This thing is really moving nice. Again, overextended at this point, but these are the stocks that you want to keep on your watch list. And when they come back and retreat, with the next market pullback, these are the ones you want to take a look at, like around the 21-day, or if you're lucky enough to get the 50-day. That's the kind of relative strength you want to look at. Yeti is no Yeti from the drink cups. This thing is doing really nice above the 50-day. We came down here, tested the 50-day, and looks like we're making a nice move above that. So it's up today, even though the market's down 90 points on the S&P right now. Getting a nice bounce here, which I think is again shows a relative strength. Lemonade, this one's up today. Again, 50-day moving average is showing support. That's what you want to look for. So good relative strength right there. I like this one. A name many are familiar with here, Freshpet. This thing was in a long downtrend. You can see here we had an uptrend, and we really got hammered here. We were up in the 160s and went all the way down to 48. Now you can see we're making higher highs and higher lows. So really good chart here. Looks like it's the beginning of the next stage or phase of a nice run. We're above the 50-day. And if we can get back down here, let's say with a pullback down to like the 63.50 level, I think that would be a good entry for this, and as long as it could stay above these former lows here. So I like that one longer term. EMO, this one's at a kind of a critical juncture here. Oh, looks like it's breaking down. This is actually Thermo Fisher Scientific. They actually have a local, pretty big headquarters here in Trexlertown, Pennsylvania. I think they're headquartered up in Massachusetts, but you could see a nice run here. We came down, got a couple of points on this trend line, but it looks like we're breaking down below that 569. So we're a little bit below that today. So I would not do anything with this unless you can get back above that white trend line there. But overall, that's in general, it's a pretty good stock if it can turn around. And you can see a lot of sector rotation going on. I think I put this one up earlier. This is a software name that was pretty popular. Look at how that's getting hammered the last couple of days. This is Unity Software. I mean, the software names are really getting hammered. So you have to really understand the sector rotation and make sure that you're in the right sectors. As the market begins to shift. Obviously the precious metals, the mining stocks have been doing really well. AI stocks kind of got hammered in November, but then they came back really strong. So you kind of just have to be aware month to month what's happening with the sectors, and then look to get into the top stocks, for each of those sectors. ABBV, this is another one I like. This is a biotech firm. They're up today, but this looks like a double bottom to me here. We undercut this low from November. And that's a very typical, bottoming pattern where the second low just barely undercuts the first low, and then, it'll take off from there. We had a nice run with this one. So I do like that one, and it pays a 4% dividend. So ABBV is a nice dividend paying stock at 4%. So let's see what else. Alta, I like this one. And this is a good example here. Of a trend line where, if the indexes cooperate, hopefully this is what will happen eventually with the S&P. We've got like an upper trend line like this, and we're bouncing around here against it, and then all of a sudden we get above it, and then you'll typically see a retest. And it did that perfectly here, this stock, and it stayed above the 50-day the whole time. So this is real nice action, very nice price action here. This is where you typically would be selling against this resistance here, but then once it starts to break, and especially when you come down, you retest that and you start taking off. That's a really good chart pattern there. So you're basically looking to stay above this trend line now. It's retested it. And as long as it can stay above this white line, which coincides with this former low, of 624.95, I think that's that's a good looking chart. Now again, it's dependent upon what happens with the overall market. I mean, this thing could come crashing down quickly, just like any other stock. But the constructive, move here as far as, this upper trend line is concerned, and that's kind of what you're looking for when you're doing technical analysis. Okay, just a couple other names really quick. The energy area, CVX, Chevron, this is doing great. So again, overextended at this point, but we get back to 21-day. I think that would be a good area. And all these, ExxonMobil, BP, all the oil companies, I think those are all looking pretty good right now. Caterpillar, I like this one a lot. You can see this thing, good earnings. Bounced off the 50-day. I missed this. Wish I had gotten in at this point, but this is what you want to see. I mean, you basically got a nice run since the April bear market low, and been staying above the 50-day, this whole time. That's exactly what you want to see. Perfect chart here. So if you're looking to get in, you gotta wait. Hope this gets back to the 21-day at some point, and then between the 21-day and the 50-day, that would be like your buying opportunity. John Deere, I like this one as well. You can see nice move today here, up about 9 points. But again, this thing is kind of breaking out here, overextended. But if it can come back down and retest the 21-day, that would be great. MRX is a new name, Marex Group. I like this one. It's right at the 50-day. So you can see we kind of came down, out of this downtrend. broke it. If I were to draw a line here, this is just like Apple, which I talked about earlier. If I were to draw, a trend line connecting these highs, this is an area where you can see, okay, we've got a break right here on earnings, and now all of a sudden this thing has changed its direction. So this is what you're looking for. It would have been great to buy it down here, but I just picked some up today at the 50-day. So see what happens. I have my stop loss below this low right here at 37.40. The low was 37.54 on January 12th. So we'll see what happens. If the market continues to deteriorate, this will stop me out. But I bought it around 38.10. The 50 days at 38.16. So I bought it just below the 50-day, and I'll sell it at 37.40. So the risk reward is what you're looking for. The risk, very, very little in terms of my stop loss, and the reward is, hey, if we form a big cup here, we could go all the way back up to somewhere close to 50, 49, $48, something like that. So that's what you're looking for. Low risk, high reward trades, and you get stopped out all the time, but those that you do stay in and they stay above your stop losses, those are the ones you want to hold on to. And when the market does turn around, hopefully they're the ones that are moving the most. But you can see some of these, like SPGI, which is an S&P global fund. I mean, look at that candle. Wow, it's down 10%. I mean, that's just, and this is S&P global, so you could just see the deterioration here and what happened today as far as the market. And again, I look at this as a lot of this is tied to the technicals. Again, we go back to the S&P and you see what we're up against here. I've sold a lot as a result of this, and I've been talking about this stuff scares me, because when you start hitting these upper trend lines like this, and on top of that, you got, the old MACD, which is showing this kind of, if I look at the 2-year or 5-year chart, this kind of negative divergence, that worries me. This isn't, just buy without a lot of extreme caution. So any existing things that I'm buying, I'm putting very, very short leashes on as far as stop losses. And, I'm not going to, for anything that I still have, I'm not going to, just hold on to it and try to, keep buying more, like Microsoft. It's like trying to catch a falling knife, because if you look at Microsoft and you say, oh, hey, earnings came out here and you were up buying up here, and now all of a sudden, 4 or 5 days later, you're down here at 409, and it was just at 481. I mean, that's just, that's huge. And you can see where it was all the way up here at 555. So big drop there. Now, I'm not saying, again, anything below all these moving averages, that's very bearish, not a good thing. But as I've said in my past videos, the only thing that trumps that are these trend lines. And when you start getting close to these trend lines to me are the most powerful technical analysis, thing to look at, because they do work. I think it's something that everybody's looking at, and you're looking at support levels and these trend lines. In a stock, especially like Microsoft, a lot of institutions and technical analysts and even algorithms, they're looking at this stuff. And a lot of times this is where support will come in, but has to be based on obviously the overall market conditions. So, if this market keeps going down, going back to the S&P and the NASDAQ, if this thing keeps going down, obviously that's going to affect all stocks, and a stock like Microsoft is going to probably go down further and fill that gap at least at 395. So we'll have to see what happens here. Okay, I think that's last ones I wanted to touch upon, 2 more, which look good, is a Target. This actually looks really nice here as far as coming out of a base. You can see we had if I do a longer term chart here, had a nice run up, and then we had this basically downtrend, and it looks like we're finally getting out of that. Potentially we're making higher highs here, so this one may be turning around here. I wouldn't be buying it here, but this may be a very beginning, early stage of another nice run for Target. And similar stock, Walmart, you can see how that looks today. It's up couple of points, but this one is in a nice trend here. Has been a nice trend. You can see the longer term, going back to 2022, after the bear market in 2022, this thing has been on a nice move, going from 40 up to today 126. So really nice move here. If we get a pullback to the preferably the 50-day on this one, I'd be a buyer there if we can get down to the 50-day. If we do have a more longer term pullback or correction going on here, we'll have to see. Okay, so those are some of the stocks I'm looking at, some of the ETFs, some of the different sectors. Big thing right now is to keep an eye on the S&P and the Nasdaq and see what happens up here. And we've been hugging this upper trend line for a long time, and it can keep going. But I suspect that we're getting closer and closer to a larger pullback. And I think at some point, these gaps, we got to consider these gaps here as potentially getting filled. Doesn't have to happen, but that would definitely, I think, fuel this next leg up if these gaps got filled and then we got above this trend line, this upper white trend line, and then formed a new channel and took off from there. So we'll have to see what happens. Okay, hope everybody's doing well. Have a good rest of your week.